So Jason, tell me what has been going on with your Tilray on the wheel. See your spreadsheet up there.
I got a spreadsheet, but that's part of what we're gonna go over since you're definitely more of a wheel master than I am. So I started off this. I actually originally picked this stock because I had a friend who's been playing it for the last year and a half, and he's been very successful at it. But successful, I think when we were up at $19-20 is when I was looking at what he was doing. So I just got started, kind of a random one. Something I don't mind owning. Like, it's not something I'm super into either. So I didn't mind losing the shares. So something kind of, as you know, super important about the wheel. Can't mind owning it. Can't mind losing it at the same time. All in all, I think we've dropped. I think originally it was probably, obviously if I sold my first put at 19, it was probably somewhere around $20, and it's gone down ever since. 4 months into it, which isn't a ton of time, down 1,300, and we're holding 500 shares, and it looks like we kind of found the bottom ish, I think, on it so far.
Yeah, I'm just looking at it now. Similar to all kind of growth stocks, and we'll probably go into ChargePoint at some point. It's had a pretty decent week. It was down at lows of like 12.20, and the highs are about nearly 15. So it's not doing bad. So what was your original strike price that you got first assigned at? Just interested.
At 19. Yeah.
Wow. And then you own, how many contracts is it?
So I have, that looks ugly. Right now I don't have any contracts on it. So I had, let me get it back.
Oh, as in shares, sorry, shares.
500 shares. 500 so you can
shares.
See, on the right side, I've been assigned 5 times.
Okay.
19, 18, 1750, 1250, 11. I think I finally had my first put I sold at 10 that didn't get assigned, that expired this week, yesterday, Friday, or 2 days ago. I just haven't filled in the rest of the spreadsheet other than keeping track of the actual dollars. So that was the first one I actually didn't get assigned on put wise. Looks like.
Okay, and then let's explain what 10. Oh no, because you're American. You do your dates the other way around. So that's 11th of October, right? Yeah. On there, which is good. And then just curious on, so you're tracking your break even on this?
Yeah. So over here on the left side, my actual cost basis of the shares 1560, but the adjusted cost basis with the premium that we've collected is 1374.
Okay, perfect. And then you're comfortable selling calls between your adjusted cost basis and your actual cost basis?
Absolutely. I'm comfortable just selling it at my adjusted cost basis. It's fine with me.
Okay, so you're just happy to kind of get out of this trade and then recoup back your original 7.8K.
There you go. Exactly.
Yeah,
but I mean, down at least it bounced back a little bit. Now I was kind of half hoping to get assigned on those last 100 shares at $10. So that way, we were closer to like the 1350 or something like that, adjusted cost basis, just because the premium at 15 or $16, just, I mean, we're picking up pennies at that point. I think the last ones we sold, actually, I think that this was a mistake on my part. I think I didn't enter the correct amount, but I'm at $14 and $15 strikes. We're picking up like $7 and $4 for selling 2 weeks out.
Yeah, well, and this is the bit I like about, the wheel strategy, is that even if you do get assigned the shares below your, where you get assigned shares and then the price has dropped a lot further than your strike, you can still pick up those cover calls, because I've got a weekly riot series that I do with one contract. So I think I'm 11 weeks now into this series, where I got assigned 100 shares at 32.50, And obviously it dropped to the low of like, I think it was like 25 a few weeks ago, and I'll pick up pennies, seven to $10 or whatever it is. But in 10 weeks I've made 7.5% return on my $3,250 that I put in. And only if I did my covered call on the Thursday when Riot was at 31, I would have picked up $114. But now I'm going to pick up scraps on Monday of about 20. So when it tanked again, but that's fine. I've got no issue. And like you've said a lot of times on your channel, that the step one is you just don't mind holding the shares. And I think probably if you ask yourself hand on heart, you probably don't want to be in the position you are with Tilray, but like you said, you're happy to dump the shares at even at your adjusted cost basis, just to make that 7.8k work a lot harder for you, because you can put that in other places.
Yeah, that's definitely, I mean, that's the only real difficult thing, is just lost opportunity with that same amount of equity. But on the other side of things, like, I mean, no crystal ball. We didn't know how this was going to turn out. If I did, obviously I wouldn't have been selling puts at $19 at all. So definitely, like, it could have turned out a completely different way. But I also wanted to play this kind of just to show what happens like after a year or something like that, 9 months. I mean, we're barely into this thing. 4 months. I mean, not really even. So like after a year, what does this look like? Even if the stock had dropped $5, am I profitable on it? Because we're selling premium on it the whole time. Kind of want to see what it looks like. Pretty ridiculous to spend $7,000 to have fun and see what it looks like, but I mean, is what it is.
Yeah, no, like I said, I totally get it. I totally get it. I'm in a similar position. I could show you my my ChargePoint position if you're interested in that. I've got a very similar thing, bit of a bigger numbers than what you're showing. If you don't mind, I'll quickly share the screen as well, so you can kind of see what I've got it on here at. So if I hopefully you can see my screen.
Still showing my, let's see, you're sharing, let's see, maybe I have to stop share first.
Yeah,
I'll stop share. Okay, now we see yours. There you go.
Okay, perfect. So I've just taken a little snippet of my Interactive Brokers account. So I own 202 shares in this stock, a beast. And I'll go through the chart. I've not put it all on that one position, but I've got 64k in. It's currently worth 47, with an average price of $29. So I've got an unrealized P&L of minus 16.7k, and not a great place to be in. Like, same with what you just said, the opportunity cost of that 64k. And as you'll see, when we look at the chart at the moment, of where ChargePoint is currently sitting, is that 64k. I'm picking up when I call scraps of like $100 to $150 a week, because I'm now selling covered calls way even below my adjusted cost basis at break even. So so if we look at the chart now, I think I've got it on here. ChargePoint is trading at 21.36. So similar to Tilray, had a I'm on a 4 hour, but had a great week. And hopefully now that is broken the kind of trend line of these lower highs, and now hopefully it can come back, have a little bit of a bad Monday and shoot back up again. But you see my cost basis is 29.09 as just on the previous screenshot, and with all the premiums I've collected, and ChargePoint isn't a big premium gainer. It's not that volatile, so even the premiums I am getting are not that great. So my adjusted cost basis is 27.87. We are still way behind that. So I've sold a covered call at $25 expiring this Friday. So I tend to do weekly options with this, and I picked up $8 per contract. So what's that? My you probably know it quicker than me. What's that in 22? Yeah, what's that? $176. Like, don't get me wrong, it's going to lower that break even down. And for me, I don't like giving back my premium. I hate it.
Yep.
It's a painful thing. I've been doing this especially for ChargePoint. I've been in there for so long now, since like July, that I'm not giving back my premium. I'm happy to sell below my cost basis in the hope, fingers crossed, I don't get assigned, which is very unlikely because it doesn't pay a dividend. So I think I'm relatively safe on that one, unless someone presses the button really stupidly or something like that.
Right.
That that when it eventually gets back to the 26, 27 mark, those covered calls at the money at the 29 or at the 29.50 or the 30 are just going to be beautiful. I should be netting around $1,000 to $2,000 a week once that comes in. So I'm long-term bullish ChargePoint. I know me and you have debated over ChargePoint and your kind of views on it. So we'll agree to disagree on that one. But I just want to get my 67K back, and to your point, is those 22 contract or 2,200 shares or 22 contracts. As I thought I was picking up a deal when I got my first 10 contracts at this level over. No, sorry, it was at 30 at this level over here. But who was I to know it was going to keep going down? So I've averaged in my original cost basis was 31.50, I think it was, around this area, and I've got signed another put at the 20 strike 2 weeks ago, and I've got another 2 puts at 20 as well. So similar to you, I'm selling puts on it to lower down that cost basis. The cash that I've got is obviously there's a lot invested in there. So every put I do get, because I'm very top heavy at the moment, it's not breaking down that break even every time all my cost basis when I do get assigned, but I'm chipping away at it. Even the puts that are expiring worthless, I'm picking up $30-$40 a week, just by doing those. And I'm fine with it. And this is, like I said, and I don't like losing. So I know you like to do put credit spreads. I know you can roll them out and things like that. But the fact that I can actually lose money can actually leave my account for it. That's why I don't mind holding an unrealized loss, because I'm not selling my shares. So that to me sits okay with me, because I know eventually stocks go up, right? That's kind of the main thing, that eventually ChargePoint will get back to the $29-$30 mark. And again, it might take a year. Hopefully it doesn't.
Right.
But between now and then, hopefully I can still pick up those $200, $400, $600, $800 a week. And that's just going to ramp down my break even a lot faster as ChargePoint goes up. And ChargePoint do earnings relatively soon, I think, in November. So yeah, we should see how that kind of plays out. And all news so far that I can see at the moment is positive in the short term. When you look at like for example, like Blink, probably one of their kind of nearest closest like-for-like competitors, the analysts are saying, and everyone's saying, ChargePoint is a better bet than Blink at the moment. So there's not, bar it herding cash like any growth stock is at the moment. Revenue expectations, growth expectations are all still in line, and hopefully a strong earnings can hopefully give it a bit more of a push, so I can start making more and more money every week on the stock.
Yeah, like even like you're talking about though, if you're sitting on it for sitting on it for the next year, I mean, you're collecting that's about $600-$700, bounces back a little bit, and you can collect $1,000 a month. I mean, then you're down $4,000 on it in a year. Not terrible, and that's without the stock even moving.
Yeah, exactly. And then if you zoom out a bit on this stuff, we go back to the daily. Anyone that is knows ChargePoint, it has a strong support at that 20 mark.
Oh, okay.
And it dipped below it. Hopefully that's one of those like kind of false breakouts, then goes in and then starts going the other way. So I'll take that all day long. And we talked about it just before we turned the video on, is I've now got a leap on ChargePoint as well. So my break even on my leap is 21 or 22. It's either that, and I sold my first covered call for like 42 cents or something like that. So I managed to pick up that on one of my other accounts. So I'm going to hopefully reap the benefits of that. One thing that interested on your view on is around hedging and like, I could have bought a put during this time to kind of hedge my position slightly. Yes, okay, I'm quite, contract heavy on it, but do you do anything like that? Do you ever hedge your position by buying puts or things, or would you ever consider buying a put on Tilray, for example, like if Tilray does continue to go down?
No. I what I keep seeing over and over again, and this is, little anecdotal. I think as soon as the stock moves in such a way where it pushes you emotionally to where you're just like, crap, I should just buy a put.
Yeah.
That is the day. That's the day where it turns around.
Yeah.
And
No,
and
I
I've
get it.
like you've probably done it at some point, something in that realm, or where people are just like, I'm done with this stock, I'm done with crypto, I'm done with this. They sell out and it's the next day. I mean, maybe it's a little tinfoil, but maybe that's part of market manipulation a little bit. But I know some of it does play with our emotions. But I feel like that's exactly what would happen if I did it. And like, for example, on Tilray, this is the wheel that I'm playing. This is my plan. And every time I step outside of my plan, that's when I screw up. That's when I guarantee almost that I'll lose money.
Yeah, no, definitely. And I think for something like the wheel, once you are assigned, the game plan's fairly straightforward, right? You pick up the covered calls, the premium you receive. In my case, yes, it does lower my break even, which then allows me to sell covered calls below my cost basis. In this particular example, I'm selling calls way below my adjusted cost basis, but that's beside the point, and that's a risk I'm willing to take. But in your Tilray example, you're quite comfortable, dumping the shares, at your adjusted cost basis. And the more and more covered calls or the pennies and the scraps we're talking about, we're still going to lower it by like 10 cents, 20 cents a week. So that's gonna help you in terms of getting to where you need to get to. One thing I'm quite interested in is when you place a put and you don't get assigned and you make like 50, 60, $100, what do you do with that? Do you just keep it in your account and use it as potential collateral for your next put you're going to sell? Do you buy shares with it, or do you withdraw it and pay your cell phone bill? I'm really interested in what people do with the premium that they actually collect for those who don't use it for income to pay for things.
Good question. So on Tilray, nothing. I don't do anything with it other than it goes back into, just adjusting my cost basis.
Yeah.
If I spent it, then it's not really adjusting it. But shares of companies that I own that I like, that I do sell calls on, I immediately turn right around and purchase shares of the company. So like on my Tapestry or Tesla or any of those, anything that I own that I like, I'd turn right around and I purchase shares for that exact same dollar amount.
Amazing.
Yeah.
And then I was saying, is your hope just to pick up 100 shares of it over, a year or something of, X stock, whatever that may be, and then start selling covered calls on it because you built up those 100 shares through premiums you gain throughout the year?
Most of them actually are dividend stocks, so that those are, or they weren't when I picked them up, because I picked them up, a lot of them, just during that big dip, and eventually sell, grab another 100 shares. Palantir's one, so that's one I just rolled out my covered calls on Friday, and then I picked up another $100 or $200 worth of shares on it, and then as soon as I get another 100 shares, I'll sell an additional call on it.
Yeah, and what's your cost basis on Palantir? It's the one that never moves, man. It's the one that you keep saying.
Yeah, which is fine. And I actually, Palantir. Let's see, Palantir. We have. Actually don't use the desktop version of this very often. So 2420 is my average cost. I have
in the middle of this range, isn't it, really?
Yeah. Yep. And I don't track it. That's the Tilray the only one I actually track on a spreadsheet. This I don't.
Yeah.
But I have a few leaps on them. I have January 20 2022s, or no, June 2022s, January 2023, and a January 2024, all at $20 strikes.
Okay, $20. Okay, nice. And speaking of, that tracking on a spreadsheet and all of that stuff, is your real main indicator your overall account balance and hitting all-time highs? Is that what you really look at to see your growth and what you're doing is going well? Because I know you're very heavily invested in Tesla through shares and put credit spreads and things like that. What is your main indicator if you're not tracking it all on the spreadsheet?
That is it for sure. And my account, really, like, you could stick Tesla's chart over my account's chart, and it just, my account looks a little bit amplified since we're doing some spreads and things on it.
Do you want to get your account on the screen more? Like, I'll do a bit of an intro for my audience. I'll put this on my channel, but I think some people probably need to see, like, a lot of people, there will be a lot of money to them. Some people will be a drop in the ocean and things like that. It'd be good just to kind of show and how are you making money? Because I know you're not really much of a wheel kind of player inside the game, and you're more of a kind of put credit spreads and things like that. Can you give a little bit of a crash course, a 2-minute synopsis of a put credit spread?
Yeah, put credit spread, I think, is,
wait, look at that growth. Is that a daily growth, or is that it's all time?
That's all time, actually. Let's see, well, daily, because it's the weekend and all I have is like a few $100 worth of crypto. But we can look at, like, I don't know, the month or something like that. As soon as it
crazy. And for me, it's all about even a small percentage gains, but the absolute on such a big account in terms of dollars that's just crazy numbers. To that effect, you should see my account where I've got ChargePoint, and when ChargePoint drops by 1%, I can lose 3-4 grand in the day, and I can make 3-4 grand in the day when ChargePoint goes up by like a percent or so. And that's probably the same for you. I've seen your videos where you're up 6 grand, down 6 grand, and at the end of the day, you're so confident and bullish long term on Tesla, it doesn't affect you, which is again the main thing I think we both try to preach to our audiences, that it's, as long as you do it on a stock that you love. And I know your Tilray example is probably an edge case with a very small amount of your overall capital, and we like to try different things because we like to also entertain our audiences as well on various different things. And but the key is, and I'm sure you're probably going to echo the same, it's just do it on a stock or stocks or a portfolio that you love to hold for the long term. And it's as simple as that. If you do that, in my personal view, I don't think you can lose, personally, assuming that the stock does go up. But it is what it is.
Yeah, I mean, especially playing the wheel, like, there is no, well, like, for me, the wheel would be losing on Tesla, like, where it's so scary to the upside for me. I'd have no problem selling the cash covered puts, but selling calls against it is super scary for me. Even when I'm selling them a couple $100 out of the, even if I'm selling them $100 out of the money or a couple $100, because we all see how it can move, I guess, in both directions. But yeah, this is just kind of, I guess, but an overview of it. Like, pretty much what I've done. I started a couple years ago when we were all locked down, nothing else to do. Started this account with $575, and for the first little while, I definitely got lucky. I got into options because I heard of the whole Wuhan thing, and I'd heard, and I kind of theorized about what could happen, and then I didn't know it was going to happen at this level, but all I wanted to do was learn how to make money when the market overall went down. And that was my initial bump up. So the reason it shows negative, because you don't have Robinhood, but this is the money I've actually withdrawn. I've taken out $50 some $1,000 out of the account, just to make sure I didn't ever want to lose everything that I gained. But I had an initial bump up that February, March with the market dropping, and then pretty much traded sideways for a long time. And this was that between April May and June, where we pretty much didn't move. That was me trying to figure out what I wanted to do, trying different strategies, watching different people's takes and YouTube videos and whatever, figuring out what a butterfly was and all that stuff. And then put credit spreads, which really clicked with me. That's what really happened. And then so from there, it's been, I mean, we definitely had our ups and downs, right? We've had down $20,000-$30,000 days at some points, but overall, I think the trend is pretty decent.
Oh yeah, no, definitely. And so then, okay, let's just say got $500 in the account,
Yeah,
and I guess you would probably say put credit spreads as probably a real main strategy that you really got really. And so how does it work in terms of placing that trade? If you could just show a kind of simple setup on
sure.
on Robinhood, so people can see what their risk is and kind of things like that. And let's not get too technical on it, but just a brief overview. And then I guess as you started to make money doing this strategy, then that gave you the confidence to start investing in shares and trying different things as your account grew, going into the wheel and other different things.
Yeah, so we don't have to worry about getting too technical because I'm not a technical trader whatsoever. I'm all so that is not part of my normal language. It's all just price action and news catalysts and those type of things that I pay attention to, and which is the reason that the majority of everything I play is on Tesla, because I do pay attention to it. Not great to do on a random stock at all. So on Tesla, the basic idea is find a price that you don't think it's going to go below. Pretty straightforward, and we can kind of look at a range of things. On Robinhood, that's all we're doing. We're just jumping into the options. Ideally, like from a back tested standpoint, which would technically be correct 4 to 6 weeks out, just so you have enough extrinsic value, and that's about as technical as I'll get. Which basically extrinsic value equals time. The more time that you have, the more opportunity we have to manage this should things go wrong. So pretty much two parts to a put credit spread, just a short and a long position, and basically anywhere from where it is now down makes sense. They have on Robinhood, it will show your probability of profit. So this is just the likelihood that you'll win on this trade according to their analysis. But basically, the lower we go, the more runway we have between whatever the current price is and it going down this low. So something I would consider super safe at this point might be maybe an 800, and we just have a sell put.
You can make 15. Oh, just a month there. You can make $1,500 a month. Just doing puts on it, doing the wheel.
Anyways, yep. Or and with Robinhood, they don't let you margin. So you do have to have the full. You have to have $80,000 to be able to just sell the put.
Yep.
But in our case, we sell that one, buy the one below it. So $5 spread. We need to have $500 in our account. Actually, technically, only 400 and some, because we're going to collect the $100, and that's pretty much it. They actually have a little chart basically here, and you're collecting $100 worth of premium, and you get to keep that $100 as long as the price doesn't go below the short strike price of 800. And that is basically all I've done from 50,000 to 250,000. Anywhere where I've lost money, it's probably doing stupid YOLOs or other plays, but the majority of that $250,000, probably even more, that's all I've done.
Wow. So your max risk in this particular trade is $400, because obviously it was 500 through to the strikes, but obviously you're going to collect 100 in premium. And yep. Then do you let this go to expiration, or do you buy to close and open a new one? What's your kind of view on that type of stuff?
So this it's a question I get a lot, and I definitely do not have an ABC. Is one of the things if you come and see what I do, it kind of sucks because I don't have the, hey, this is exactly the delta. This is exactly exactly what I do. So um sometimes I'll let them expire worthless, and sometimes I will roll them out. Or and sometimes I close them. And it really depends on what's happening with price action or how much premium I have left to collect. So if we're still 2 weeks, let's say we're 2 weeks from expiration, Tesla's gone up a lot, and I only have $5 more worth of premium to collect. Nope, I'm not going to wait 2 more weeks with $500 on the line to collect less than $1 a day.
Yep.
So those ones I'll let get closer to expiration. And I'll actually do shorter term, closer to the money once we have a drop, depending on what the news was that caused that drop. So playing this for long enough and paying enough attention over time, I can decipher the difference between news that actually affects the business or potentially, or is a big, is something that's actually going to affect the stock price, and some news that is just stupid that it even moved at all. So if we drop $50 over stupid news that doesn't affect the core business at all, I'm at that point, I've seen what the market reaction is going to be. So I'm actually more comfortable selling closer to it. But in general, like as far as rolling them out or closing them out, I like to roll or close the week before expiration. So the Friday before expiration, still have a little bit left there. And that's when I'll take a look at it. Depends on how much premium there is left to collect by waiting an additional week.
Okay. Yeah, no, that kind of makes sense. And like I said, even doing the wheel on whether or not you kind of roll, when do you roll it, or do you roll it, or do you get assigned? There's many schools of thoughts on people that like to get assigned their kind of 100 shares, for example, because it's such a good deal on a stock that they love. Others, are doing it to collect premium and will just keep rolling until until eventually you can't roll, or you got to roll it out until like another 6 months. I remember that kind of happened to you, where you had a scenario where the first few videos that you put on YouTube, you were making some good money, and then that massive thing happened. I think it was around February, March time, where everything was tanking, and you were rolling out all the way out to November and things like that this year. And then as Tesla went back up, you rolled them back in, and then eventually now you're out of that situation again. So what was going through your head during those times?
Oh yeah, you did catch that. So yeah, and this is actually an example of these are 25 that I rolled out during that time. So my thought during that time was I don't really care what happens in the short term. At the end of the year, Tesla's not going to be below $700. Like I was like just rock steady, like that's that. So this is an example of like 25 that I did roll out. Till January. So I actually still have January to this. We're up now $12,000 on these plays. At the time, what was the premium? I think.
Wow.
Yeah, premium was like $900. It's crazy. So I had to wait, and that was, what is that? May, let's see, February.
Yeah.
So from February till the end of the year. Now we could close these out if we wanted to, but I'll just kind of hold on to them. Still have decent amount of premium to collect. I did actually have 35 of these, and I rolled 10 of them up to a little bit higher strike prices. But that's my thought, and that's why I do it on Tesla. Like they have such a clear path to me to $3,000, $4,000, $5,000 a share. What year that's going to happen, what month it's going to happen, or what's going to happen in any kind of short term. I don't know. My crystal ball works is about as good as yours. So
Yep.
we just don't know that, but I know long term where it's going, and at least I have high confidence, or know as much as I possibly can. So that's what just allowed me to do that. So that's what I did. Rolled it way out. That gave myself another 9 months, collected some more premium, and then I was able to open up more put credit spreads with that premium just along the way.
Yeah, and I guess then that's why you love options, right? Because even though options is a risky game, and but the control you have of, you know, selecting your own price and selecting your own expiration, and the concept of rolling still puts you in control even when things don't go wrong. Interested on your views on that, because you've just proven it.
Yeah. Yeah. And of course, just because I'm right this time doesn't mean I'm right. And I can't, and I absolutely cannot have the same confidence or thought process with Tilray. I just can't. It's not a company that I know inside and out. I don't follow it 100%. Yeah, there's a lot of them, and we only have time to know so much. I mean, we just can't know all the companies at all. So that's what gives me the confidence on this. But yeah, total control, and as long as we have some patience at the time, like February, that was like only what, a little over a year since I'd been doing it. Now it's been 2 years. So that was like halfway through basically my options career already, but still that confidence was there after knowing it. And I think the longer we do this, the less rolling it out seems like super far off, right? Like at the time in February, January seemed like forever off. And now, hey, here it is. I'm going to be able to roll and use this collateral for something else here pretty soon.
Yeah, no, definitely. So then if you had to break it down, then someone that's got a $500, $1,000 interested in options, understands the basics of buying puts, selling puts, and the wheel and all that kind of good stuff. Well, if you had to break it down in terms of, you know, where to start, what to do, what strategy, would you say that put credit spreads for that value of account is a way? Be patient with it, start collecting, you know, the $50 to $100 every 2 weeks, every month, whatever it may be, and then just build it up and just be patient, and then you can start moving on and start putting either 2 contracts down or trying different things in terms of the wheel, or even leaps and some quote unquote complex, some more complex strategies.
Yeah, just I mean, I guess it's hard because just getting started is definitely a broad range of people and what they've learned. A lot of this, if somebody's just finding this video, a lot of this when we're talking probably sounds like a foreign language to you. Keep watching stuff, keep researching, use Investopedia. Eventually this stuff will make sense. And as far as building the small account from 500 or 1,000 up, I mean, I did it. I've actually done it twice. So I have a Tastyworks account where I started all over, and I was like, because going from 500 to, I mean, 50,000 or 100,000, it seems absolutely ridiculous. Like, seems like a lot of
sounds like Wall Street bets here. But
yeah, it sounds like BS, right? Like somebody's trying to sell you something like, hey, do this, use my secret strategy and make all this money. It doesn't sound right. So I did do it again with my Tastyworks account. And actually I played even safer than I do in this account. And I was able to I think I started that one with $600 because my thought process was I'm going to start with 500 and have an extra $100 in there just in case I need to pay to roll something out in case I screw up. And that went just as well as this one. Actually, semi kind of easier because because I play further out of the money. Sometimes I'll go a couple of weeks without looking at that account, and I'll just get a text message. Hey, by the way, you have something expiring in your account today. And I'm like, oh yeah, I have a bunch of collateral in there now. Now we need to roll it out. But this is exactly what I do. I am going to start doing this again in another account in a few weeks here, doing exactly the same thing. And I'll post it all. It's actually going to be in an IRA account.
Amazing. Maybe that you know, we can I can jump on with you, like, I don't know, once a week, once every 2 weeks, just to see how you're getting on, and, you know, ask those kind of, you know, newbie starter questions to some of the stuff, which might help. You know, like when I watch option videos, it's just one of those things that they say that really makes it click, because there's many different ways you can explain options. And I learned selling options through the Ryan Daniel Morang video. I don't know if you've ever seen any of his videos where he used the clickbait thumbnail of renting a stock, i.e., selling covered calls. And when he explained the analogy of renting your house and things like that, that's when it clicked. Before that, I didn't really understand it. So people learn in different ways. So it'd be cool, we could jump on once every 2 weeks and just how we're doing now, kind of how you're getting on and stuff like that. I think that'd be that'd be pretty cool, and something to leverage on my own audience that are interested in this as I ramp up my kind of option trading videos as well. That'd be pretty cool if you're up for it.
Yeah, absolutely. And then I typically on most Saturdays I live stream too. So if after you're trying to dive into it and you just don't get it, like hop on a live stream. I'm happy to answer just about anything out there.
I'm sure whatever we post on this video on our respective channels, we'll have everyone's your channel, my channel below to check that one out. I'd love to jump on a live stream with you as well. I think that'd be pretty fun. I think I can add a lot of value to your audience on there, because like I said, we are different types of traders. We both trade options. Yes, you trade the wheel and other things as well. I'm predominantly a wheel trader, and I'm starting to experiment with leaps. And are there any other additional questions you've got for me in terms of my trading style or anything like that that I can add value to your audience with?
One question about ChargePoint. Hopefully you answer. How do they make their money?
What do you mean how they make their money? Through three revenue streams.
Okay.
A is physically selling the charging stations, and then secondly, the actual software that goes into those charging stations, and then thirdly, someone's got to manage and serve those kind of charging stations. So for me, when you got a hardware business, a software business, and a services business, I used to work for Hewlett Packard Enterprise. So hardware, software, and selling services for me is the whole wrapper in terms of the game. And from my own perspective, one of the best in the business, but I'm sure you're going to argue with me to say it's not.
Oh, no, no. Actually, somebody during my live stream was talking about ChargePoint, and I realized I didn't know how they made the money. If they were like their installations, I always see them at I'll see them at different businesses, and I didn't know if they were all ChargePoint owned or the business owner paid to put those in.
So the way I kind of describe it is that their main business model is businesses like petrol stations, all that stuff, but also residential homes, right? As this stuff grows, right, and people don't want the convenience of go parking, out of the way to go charge their vehicle, they are going to go and look for an EV charging station provider to go put one in their driveway or wherever it is it's going to be. And hopefully it's a ChargePoint one, and then you got to sell them the software for it, and then you got to, if it breaks, you got to go and service it. And who are you going to go with? You're going to go with the manufacturer that built the thing in the first place. So for me, it's their services model, because there's more and more charging stations they put out there, the more and more there are going to be the need to service them, because they're going to break, right? Not everything, as well as I know, right, that it's not going to be there, and they're going to sell those contracts for maintenance contracts that need it to do. And that for me is the royalty revenue stream of copy and paste revenue, as I like to call it.
Nice. Actually, I had realized I didn't know that, and I thought as a shareholder, you probably know much better than I would. But I think, other than that, like with my wheel, where would you be selling calls at this point, calls and puts, as somebody who mainly does the wheel?
So again, and this is where your situation is kind of unique. So for me, you're quite happy to sell and be assigned above or in between your adjusted cost basis of 1374 and or 1374 or above. You don't care if it's, I guess it's going to be 14 at a minimum, right? That you're willing to sell on. And then for me, again, I had the chart up earlier, also charging at 11. Yeah, I think I probably would at this point still sell it at 14 at a minimum. And then if Tilray pops, again, you've got the control depending on how much it actually rises to, but hopefully it rises slowly to a certain extent around the 13, 14 mark, that at that point allows you then to roll it to 15 to even your actual original cost basis of like it was going to be 16, right? So or at $16. So for me, it's down to the type of trader you are and what is your objective with Tilray. So now, like I said, for me, I wouldn't want to dump the shares unless I really needed that 7.8k. I really wouldn't dump the shares below 16. That'd be my personal view. And the other question is how much cash. I know how much cash you've got, but I can see your account. But is that I would probably continue to sell puts on it. I guess the question is, do you really believe that Tilray is going to get back above $16 at some point in the next year? Like, for example, I own 1,200 shares of Workhorse, right? And Workhorse is trading at, I don't know, just around $6. My cost basis is $13.50, right? I now no longer sell puts on Workhorse, even though I probably should, right? Because I've lost confidence now in that company with all that's gone on with their management team and the scandals and the whole what's it called? They were going to get that massive contract.
Oh, that contract.
UPS contract, all that stuff, right? And they went to lawsuits and all these kind of different things. And now they're rebuilding their management team. They've got the old CEO for Delphi Technologies and all these kind of things. But I'm still not 100% convinced at the moment, right? So
yeah,
I know like my break even is about 9. Yeah. So even at $9, that's a $6 stock. As I know, it's like $1, $2. It's not even worth my time, right? To even bother putting that covered call on, right? So I could do it at like 7 or 8, but again, it's like $2, like on like 1,000 shares, like $30 a week, right? It's just not worth it. So my strategy is nothing. Right, I'm holding those shares, right, and just letting that unrealized loss get bigger as the weeks go by, right. And part of me was actually thinking last week, because I sold 10 contracts of Riot on the wheel at 27. It closed at 28. And I made about $900. I was like, should I just sell another put for at $5 and just do it? And just, if I get a sign, I get assigned. It drops that cost basis. But then I thought to myself, what's the point, right? Because another thing about dropping your cost basis, right? What people don't think about is, I'll just sell another put below the current price to reduce my cost basis. But in terms of the percentage difference of, like, the stock has to go down for your put to get assigned. Therefore, that your percentage difference between your actual new adjusted cost basis there is pretty much the same. All you're changing is the absolute down by $1, right? So at some point the stock has to go back up, right? Otherwise you just keep sinking money into it. And I finally realized that, which took me a while, but that penny dropped. So my strategy is nothing. So I put that question back to you, is what's your confidence in Tilray of it actually going back up? Because otherwise you might just leave it and just let it do what it's doing, because you're just going to keep sinking more and more money into it. And it also depends how much free cash you got and how much you're pulling in a week. And like you said, your main indicator is your account going up. Is that line going in the top right corner? If it continues to do that while you're still holding Tilray, my personal view is just let Tilray do what it's doing, right? Sell your covered calls against it, as long as it doesn't drop too much. And if it keeps dropping like Workhorse, then you're at that point your 7.8k is just going to sit there, right. And then that's when you need to start thinking, okay, I'm willing to take the what's it on at the moment, the 1.3k loss. Get 6 grand, whatever the difference is, back to go do whatever it is you want to do with it, and sell some more put credit spreads on Tesla, which got you to where you got to crawl back that 1.3k. Because let's be honest, that 1.3k loss you can probably make back in a week or two.
Right.
Yeah. So absolutely. that's what you've also got to look at, is how long will it take me to recoup back that loss, right? So that's the example. But with ChargePoint, like if I flip it back to me, it's a similar situation with Workhorse that I'm in with ChargePoint. But with ChargePoint, the news, the sentiment is the company is doing a lot better than where the current price is at the moment. Whereas Workhorse probably should be trading lower than what it is now, right? So that's the difference between the two companies where I'm still happy. And one thing that I've started to do is, so you've got different assigned prices here, right? So let's have a look at this. Yeah, you're assigned at $11, $12, $17, $18, and $19. Why don't you sell and at the money call at, I don't know, I guess they're in $1 increments, right? At
50 cents.
50 cents at $11 or $11.50, right? You'll make more money in that covered call than probably selling your 500 shares at 16, right? So
and then just like, and then consider wiping out like
the
11, the shares I bought at 11.
Yeah, because then your cost basis goes up, right? But what I'm saying is you're basically playing the wheel
But
again.
then the shares are up, so that delta is like basically the same as what you're saying.
Yeah, so even if you did it at 11.50 or 12, but you're just playing with that one contract, so you're basically splitting out like 4 different wheels, if you know what I mean. So that's something I've been looking, because my charge point, right? So that $160 example that we showed earlier that I made on 22 contracts, if I sold my 2 contracts at 22, at the ones I got at 20, at 21 or 20, or even 22 at the money, I'm making pretty much the same amount of money for those 2 contracts than I was for the 22 combined, right? So that's another spin on it that people may not have thought about before if they're in situations like that. So even with Workhorse, for example, okay, at $5, you're picking up pennies, right? But the same concept applies. If I did get assigned at 5, why can't I sell one contract at 6? Worst case is that my cost basis goes back up to $13.50, which it's not the end of the world. It's not, I haven't lost anything, made money, but I still made money on the shorter term wheel on that one particular contract. And that's something as well that I've looked to consider. Yes, you've got to track it on a spreadsheet so you know what your old assignment prices are and all these different things. But again, I'm quite happy for that ChargePoint example to sell two of my 22 contracts at 23, because I don't want to put all 23 at all my 22 contracts at strike price of 23, because that'd be too scary for me, because then I'll need to roll it for a month and stuff like that if ChargePoint pops. So again, that's just something to think about in my personal view when on how to get, because that's the biggest thing about the wheel, right? That's the worst thing. The biggest question I get, as I'm sure you probably get, what if I get assigned the shares and the share price drops, so it's like $5 behind where my strike price was. That's the
like I have.
Yeah, exactly. So you are in the situation that I'm in Workhorse, I'm in ChargePoint. It's the same thing you're in on Tilray, right? So we're all in, and this will happen to anyone listening to this. It will happen to you, right? It will happen. There's nothing you can do to avoid it. Stuff kind of goes down, right? as we know. So now it's all about, and that's why again I'll talk about it again. I'll talk about it forever. Step 1, right? You probably don't want to be in Tilray. I definitely don't want to be in Workhorse, right? I chased the premium, and I'm sure you probably did, or you had a friend that was making good money trading the wheel on it, right? So, and that's why I say stick to the stocks you love. Palantir, Tesla. Well, probably definitely not doing the wheel on Tesla anytime soon. But do you have over 100 shares in Tesla?
Yeah.
Oh wow. So and yeah, I know you were saying before about you're pretty wary about not losing your 100 shares in Tesla, so I'm sure you're probably doing it at like a 0.2, 0.1 delta or something like that.
It's super out there, and I've had to close them out for a loss before where I was just completely uncomfortable with it. So I'm just not doing it. Like as soon as you think it's safe, then it's gonna rip up $150.
But that is the situation, is that you're closing your covered calls for a loss, right? Just think about that for a second. Would you ever sell your covered call or buy back your covered calls in Tilray for a loss? No, you probably just dump them. Worst case scenario, you can make back a
Oh
grand,
yeah,
right?
100%. Yep.
Right.
That's why it's
So
got to be something you don't mind owning and something
yeah,
you don't mind losing.
yeah.
Yep.
And again, it's sound like a broken record, but it's the truth, right? It's the surefire thing. So whether your strategy is a put credit spread or whatever it may be, even though it's quite binary, you either win or you lose in short and put credit spreads. But even that, even when you're, I say practicing is probably not the right term, but you kind of get what I mean. That is you do it on a stock that you are bullish on, that you love, that you read the news, you understand the fundamentals, and you at least have the basic technicals of support, resistance, and the basics like that, because it will, it will happen. It will happen. You will, no matter how good technical reader you are, you will get assigned shares. And we've got living proof here with the Tilray, Workhorse, and ChargePoint as three examples
Yep.
of where we are down. Right, we have a big unrealized loss. Some bigger than others, and some various other stocks. But and we're all three. Also all three of us. We're both managing those three examples very differently. And there's no right or wrong answer. Right, that's the key takeaway. There's no right or wrong answer. It's you're willing to dump your shares at your adjusted cost basis. I'm not doing that. I'm not going to do that for ChargePoint. I'm selling covered calls below my adjusted cost basis, which is a risk. I could get assigned tomorrow, or that option could get exercised tomorrow, and I could be assigned and lose those shares and lose like 15K. It's never happened to me, touch wood, but it might happen. But it's the risk I'm willing to take, and some people might be uncomfortable with that. But it's one of those things where you got to have a plan, and that's you've got. And the key thing also is tracking it. A lot of people don't track their stuff. I know you said you don't, but you've got enough experience under your belt in terms of that, and you're probably only tracking Tilray probably more for your audience to understand it and kind of showing where the situation is and what you're doing on a weekly basis or bi-weekly basis. And I track it because I love spreadsheets. I love all this kind of stuff, break evens and premium collected and all those kind of things. And I like to take a copy of your spreadsheet. By the way, I think it's pretty good. I think it's good for people to understand and educate themselves and put it into this so they can visually see where they are and they'll be more comfortable with things. And again, that's kind of where my kind of heads, where my kind of process is when it comes to things like that.
Yeah, I think that step one is just the most difficult thing.
Definitely, 100%.
It is. And then and then you're more likely, I think you're likely to talk yourself into, yes, I'm comfortable holding this. Yes, I'm comfortable losing it, when in fact you're not.
Yeah.
Yeah, because even stuff I got assigned. I guess I'm playing the wheel on a few other things, but I got assigned, during the big crash, which that was my intention. I wanted to get assigned. Like I got assigned on MGM at $13. But now I don't want to lose the shares. And then I've one of the calls that I sold at 25, I didn't let myself get assigned. I've rolled it out and rolled it out and rolled it out. But I think I'm down like $1,700 on that covered call now. But collected more premium along the way.
Yeah.
And even that one was, when I sold it, I was, sold the original one. I'm like, I don't mind owning MGM, and I don't mind if I lose it. But then I don't know, something about being up 300-400% on a stock that's paying not much dividend now, but will. It's like, I would like to have this stock that I have a cost basis of $13 on. Like, it just feels good.
No, definitely. And that's why you should get leaps instead. reap the best of both worlds. So no, like I said, I think, and like I said, more than happy to jump on a live stream at some point. Hopefully once this video goes out, we get some good feedback on it from your audience, and any questions. Like I said, I've been listening to a lot of your live stream, a lot of your videos, and a lot of the common questions keep coming out. Is what's the best strike, what's the best delta, and what stock should I do it on, and all these different things. And a lot of them is like I said, I don't know. Robinhood don't do demo accounts, do they?
No, not a paper. Yeah, we either need to do, I think WEBULL does, and I think our Swim does.
Yeah, and part of the thing when I was first learning, to be fair, I did one put on my fake $1 million account on Interactive Brokers, and and I made like 15 grand in a week or something because I just went crazy. But then after that, I went straight into a live account, which, you know, worked out well for me. But, you know, for a lot of people that, you know, selling options at the money, getting assigned, and, you know, work. And I think it's a good practice in terms of paper trading of working your way out of a losing trade in terms of, you know, like your ChargePoint, Tilray, or Workhorse example that we've gone through, is to get yourself in that situation and, you know, put yourself in the mindset of building that plan, documenting everything out, and then, you know, trading your way out on a paper trade. And if you can do that successfully, whether it is you take a loss and then you know, sell some more puts to regain that premium elsewhere to cover that loss, that's fine. Like, you know, and at least you got the confidence to say, I've done it. And then go on and move up and graduate a level. And then, okay, now I know what the worst case can happen, but, you know, do it on stocks that, you know, you want to hold for the long term that you feel, which is why my kind of main criteria is when I sell puts, I like to sell puts on stocks I like that have a long-term outlook and, you know, that are pretty much in the oversold territory, and then start selling puts on them 5-10% below the current price, because your premium are going to be better because implied volatility goes up as they go down. Like, for example, Snapchat, right? Snapchat released earnings,
Yep.
and then there was another reason I can't remember. It dropped like 20%, right? I'm going to be selling puts on Snapchat come tomorrow, right?
Oh yeah.
Yeah, because, you
I
know,
was thinking about it.
I'm you know, I've done it twice. I've done Snap a few times now, but again, I'm still long-term bullish on digital advertising and all that. So that's kind of what my day job is. I kind of live in that world, and, you know, Snapchat is still, when anyone might think about it, you know, it's still where a lot of eyeballs are at, and, you know, the price you're getting for it. It drops by 20%, and I'm going to sell puts 5-10% below that price. I might wait Monday, Tuesday, because I like to see what happens, and I like to use the RSI. It's probably one of the only indicators I use for selling puts on. Is I'll either like to see it come out of oversold territory and then start selling puts, because then, especially on like 4-hour and daily charts, the RSI is pretty good. If you go back on any stock and look at the RSI at 70-30 oversold overbought, most of the time you will see that it does retrace slightly. And because I like to do weekly options, that's more than enough for me to have a couple of green days or stay flat, which allows that theta to come in and really ramp down. And, you know, the time decays on my side for me to either exit the position with an 89% gain on that total premium, or totally expire worthless, depending on what I decide to do. So, and again, I never used to do that before. I used to use, like, you know, bar chart and market chameleon and sort by highest implied volatility and highest premiums, which used to be biotech stocks and all these kind of different things. And that's how I first started. But now my thought process is, you know, I'm willing to hold money in cash for a week or 2 weeks to find the right opportunity. And Snap is one that has presented itself through the scanners I do have using TradingView and oversold really, when it comes to selling puts. Or when, like, you know, it's reached, you know, the lower Bollinger Band and things like that, and understanding the reasons for it. But I have a long-term bullish thesis on that particular stock, and Snap is one of those. And yeah, I'll be doing that, and looking to pick up anywhere between 0.8%, you know, from a weekly trade is probably my minimum that I like to do. And that's why I love Riot and Mara, because you can pick up 1-2% quite easily in a week. And I'm long-term bullish Bitcoin and all that other stuff, which is why I love those, you know, mining assets.
Yeah, I was thinking about actually buying back call I sold on Snap. So
you own some Snap shares?
I know I have had a leaps on them, or I have a leaps on them. So I have a $60 leaps on them.
Okay.
But then when Snap ripped up, I went and sold the 75, and I sold it for more than I bought my 60 leaps for.
Wow.
So now I'm sitting on this debit spread that I've been paid $200 to hold. So now I could go back and buy back my $75 one and still sit on the leaps if I wanted to, or I can get out of the trade and trade for, I don't know, probably like 500 bucks.
You just got 100 shares for free.
Yeah.
Yeah, and
Yeah.
that's what I love, and that's what I love about leads. We talked about before offline about rolling up your leads when you're deep in the money at 0.8 delta or above, and rolling it up as the stock comes back and taking out your initial investment until you're basically sitting on a risk-free trade, and you just sell covered calls all day long, and then you could be a bit more risky with your covered calls as well, and then collect more premium. And then if you ever did get assigned, you've got your leap there for cover, which hopefully has also made a profit, so you've made a gain on top of that as well, which should be, if you sell above your break even, you're bound to have done that. And that's the bit I'm excited about leaps. At the moment, I've just recently got into leaps, and I've just bought my ChargePoint one. I've just bought my Corsair one, and now I'm hopefully Riot goes down a little bit tomorrow, and then I can buy my leap on Riot, because that's going to be fun, because that's at least going to be $50-$60 a week selling covered calls on that, for like a 2K investment. It's just going to be awesome. So I'm looking forward to that, and I might document that as well. So I might document my leaps journey if you document your debit spread journey, and then we can jump on and have a little chat about those, and that should be quite fun.
Yeah.
Awesome. Well, like I said, don't take too much of your time as well, and really appreciate letting us jam for a little bit on this. It's been fun, and hopefully we can do some more of this session soon, and then kind of really take it from there.
Sounds good to me. Yeah.
All right, you take care of yourself, and speak to you soon.
All righty.
All right.